Good morning, everybody. Mike and Corey are here on this beautiful January 14th. It was single-digit temperatures here in Ohio. I think it was like 2 degrees or 7 degrees when I woke up. I did not want to go out for my morning walk, and I have not. So today's topics, we're going to talk about Eli Lilly cutting revenue guidance, which is impacting their stock today, as well as the overall market because it's a big company. On the good news side, PPI producer inflation report came out. I'll give an update on that leading up to CPI tomorrow, which is the consumer side. And then Corey's going to talk about something called trueflation. Obviously, there's so much focus on inflation and inflating costs, and Corey's going to dive into that. So must remind you, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on AnkerstarWealth.com, and the opinions expressed are mine and Corey's alone. So I was going to start off with good news on the inflation front, but really I'm going to start off on, I'm going to call it bad news on Eli Lilly. Eli Lilly, fantastic company. If you remember last year, I went over to Indianapolis and I visited the Eli Lilly, or at least walked outside their headquarters over in Indianapolis. But, you know, big name, has hit all-time highs this year, mainly on their weight loss drug, which also deals with diabetes, but their weight loss drug, I believe is called Mounjaro, is one of them. But today they came out and they said basically revenue guidance on the weight loss drug demand is down. And one of the concerns I've always had on the weight loss drug, I mean, obviously, there's plenty of a market for a weight loss drug. A lot of, we look at weight trends in the United States for sure, definitely could use a weight loss drug or exercise. Remember, beginning of last year, I think we talked about Planet Fitness and Bowflex and some other stocks that haven't done as well. But the magic pill, that'll always sell. But the thing is, who pays for the magic pill? Who pays for this weight loss drug? And a lot of times it is the healthcare insurers. And they're only going to pay it so long. And really that money that pays it goes back to that insured population, which is also really the employer and what the employer will allow. So I've always expected there's going to be a headbutting here. Who's going to pay for this? Of course, everybody wants their insurance company to pay, but the premiums will go through the roof if the insurance company doesn't manage it. The other side of this is supply of the pill. And I know that Eli Lilly is building plants, and it says even tons of supply is coming, which when we talk about supply and demand, hopefully it'll make the prices go down. Unless you're an owner of Eli Lilly, then of course you want to keep the prices up. I will say that Eli Lilly we do not have as a core holding in our models. Which actually, if you take a look, I'm going to bring up the stock price on the fly here, I believe. Let's see, is it coming up? I'm going to bring this up because I think it's important to look at the stock price because it is now nearing or nearer a one-year low than it is to a one-year high. So if you look at Eli Lilly, you could go and you wanted to buy this stock in the past, you can buy it at what price it was last February because that's about the price where it's at now. It's had a couple dips, but it's just an interesting stock to continue to watch. Trades at almost $700 billion, so it's not over $1 trillion anymore. I think it did cross that for a while. So Eli Lilly, great American company, solving a problem, unhealthy weights. So I definitely appreciate this company. I just think there's always going to be this battle between the insurance companies and who pays for the pill. The other thing I wanted to hit on today, which was good news, and this is the number hopefully you don't do this. Hopefully it's only me and Corey and Steve and others sit and wait at 8:30 this morning. Like, oh, what's the PPI number going to be? How's this going to affect the market? And it came out and the wholesale prices rose 0.2% in December, which is less than expected. And that's the key, 0.2%, you're like, whatever number that means. But it was expected to go up by 0.4. It only went up by 0.2. Initially, the markets rallied higher significantly. They've come off that rally. They've come back to really where they started, although the small cap companies have continued higher. So the bigger number that's going to come out tomorrow is the CPI number, and I'm sure I will be reporting on that. So if you want to see how numbers affect markets, whatever number that comes out in the morning, at 8:30 tomorrow, 8:30 Eastern, the stock market will either go up or go down based on this number. And really what that is it's the inflation number. If the inflation's high, the Fed can't reduce rates. If the inflation's low, the Fed can. And that's what the market really wants. So with that, inflation is always a key topic. I'm going to turn it over to Corey.
Yeah, I just wanted to hit on a couple things in that CPI, PPI realm. First is, this would be more like just the US inflation index. So this is a website called Trueflation. They try to provide real-time, unbiased data around the current inflation rate. So that CPI number tomorrow is expected to come in at 2.9%. That's the expectation, up from 2.7% last month. Now, looking at Trueflation, Trueflation is estimating right now that we just crossed back above that 3% level. If we zoom out a little bit, it's always nice to zoom out. We had that big surge of inflation. And now, again, these numbers will be a little different than the government numbers because Trueflation is tracking what they believe is a little more accurate view of inflation. But so it could be that these numbers over here are also a tiny bit higher than the government numbers. But you do see, you know, we kind of were 3, 3, 3. Anything around 3, I don't personally believe that the market is going to have a huge issue with that. We don't want it higher than that, but it's not a deal breaker per se. Now, I just wanted to, just for fun, come over and look at, you know, one thing that does lead into or could lead to inflation would be commodities. Now, the United States is a little bit more of a service-based economy, but commodities do still have their place. So just looking at some of these year-over-year numbers in energy, you know, crude oil's up 6%, but on a longer term, you know, on a 10-year basis, you're not really seeing anything there that's out of the norm. Coming down to metals, you know, year over year, iron ore, I mean, you're really seeing for you know, copper, steel, iron, you're not seeing anything that's a one-way trend, I guess you'd say. Agriculture, you know, milk. Mike, have you noticed milk? Are y'all a milk family over there? Have you been? What are you seeing?
Oh my gosh. I drink more almond milk, so I haven't noticed it in the almond milk market, but I have heard of it in eggs and coffee. Well, and you see it in cocoa there.
Okay.
I know Steve and I hit on cocoa last year that it was surging up. Are eggs in there too somewhere?
Eggs are down here. All right, let's hold on. Let me skip industrial for a second. Let's go down to livestock. Eggs are 190% year over year.
Oh my gosh, that means they've went up almost twice as much. It's like what you could have got for a dozen eggs, now you can only get 6 eggs for. So
that's pretty crazy. Now, one thing I've heard, so those technical analysts out there, they've been talking about cattle. The chart, well, it never stopped going up after the COVID inflation. But if you go back to just a super long term, you know, you could see we've broken out the new highs above that 2015 level, and even more recently broken out to new highs. So good for the cattle farmers out there. But, you know, does this, I mean, I don't know if you're.
Hey, Corey, you're like this. When I was a kid, me and my brothers, we each raised a calf. So we had 3 cattle. Now, of course, if I would have kept my cattle for my calf for 40 or 50 years, maybe it would have turned in like Bitcoin did, right? It would have shot up, or maybe it would have just died of old age. I'm not sure. But anyways, we raised them to turn into meat like a good farmer would.
Well, that's a very cool experience. That's a very cool experience. I didn't get that. We had a dog and some cats, and that's about all we had.
And we've raised chickens before too. So if I'd have just kept those chickens, my cost of eggs, I'd
Those
be
chickens are printing
self-sufficient.
money.
They'd be printing money. So
Woo!
I'd be able to say, if I just keep this egg, it's worth twice as much as it was last year. I don't think it works that way, but anyways,
Anyway, that's all I got. Hoping for a low CPI. Let's go 2.8
yes,
tomorrow.
Corey and I are Stephen. Someone will be on tomorrow. We'll be talking CPI, and hopefully we'll see the markets rebound further. So thanks everybody. Have a good one. Bye.